In Lecture 1 we learned about ordinary income, which is effectively Section 6-5. Now, there is no section in the legislation that says that wages are ordinary income. The courts have determined that. The courts have also said that a capital gain is not ordinary income. So, what is a capital gain? A capital gain is where you buy a CGT asset and you sell a CGT asset. Now, notice that I said CGT asset. I'll give you an example. Let's say you buy a block of land and then you sell that block of land, or you buy some Coca-Cola shares and then you sell those shares. That's potentially a capital gain. So if I buy my Coca-Cola shares for $1,000 and I sell them for $1,600, I have a capital gain of $600. So the court said that $600 is not income according to ordinary concepts. It's a capital gain. Now, before 20 September 1985, let's say in 1980, I bought my Coca-Cola shares and then I sold them in 1982. That was not taxed. There was no tax to pay. I would pay tax on my wages in 1980, but not when I bought and sold shares. Now, the experts said, the government said, that's not fair. So in September 1985, the Labor government introduced capital gains tax. So the $600 profit from the sale of my Coca-Cola shares is now taxed from that time. In other words, the $600 is now deemed to be income. Deemed meaning it's not income under Section 6-5, but it is under a statutory provision. The last thing, if I buy my shares for $1,000 and then sell them for $500, what do I have? I have a capital loss, and we'll talk more about that later.